Hey, good morning, everybody, and welcome to What's Hot on the Open here at MarketStream.live here on February 13th, 2017. My name is Joseph Cusick with the Cusick Group, securities offered by MoneyBlock. Let's jump in and take a look at the markets. Currently, right now, you have the overall marketplace to the upside in the green. You have the Russell 2000, that small cap index, trading at 1395, up 645. You have the Dow Jones Industrial trading above that psychological 20,000 market, 20,333, up 64. You have the NASDAQ, that tech-heavy index, up 1790 at 5752. And the S&P 500 is trading up solidly at 2,321.74, up $5.64. Now, on the earnings front, it's been relatively quiet this morning. There's only been a handful of names. The most notable was Teva Pharmaceuticals. Ticker symbol TEVA, trading up $1.30 at 33.49. It's jumped about 4.1% now on the open after reporting better than expected earnings and expected on both the top and beat on both the top and bottom line. Elsewhere, you're also seeing the telecommunications and the telecom sector, specifically the wireless sector, really on the move. Verizon down 62 cents today at 48.36. It slid 1.3% early in the session. We saw it in the pre-markets, and it's continued after it announced that it is too going to be offering an unlimited data plan. Now, they're trying to beat out peers like T-Mobile, ticker symbol TMUS, down 89 cents at 61.50, as well as Sprint, ticker symbol S, down 30 cents at 8.66, and AT&T trading down as well today at the 41.05, down 33 cents. All of these firms have already had an unlimited offer, so Verizon's a little bit late to the party, but that is putting some stress on that sector. Now, speaking of sectors and overall broader market, the small caps, they have, as I mentioned, we're moving to the upside this morning. They're my canary in the coal mine. They're also been lagging the market. And with that being said, and seeing the larger cap peers like the NASDAQ, the Dow Jones, and the S&Ps all hitting all new all-time highs, seeing the action that we've seen today on the small cap index moving to the upside and finally challenging what has basically been 2-month resistance or highs. To me, I take a little bit of more of a contrarian perspective on that. In other words, while and the reason why I say that is because I think that the fact that the small caps weren't leading in this overall move early in 2017 means that there is a lack of conviction at this juncture on how fast and furious anything like whatever the Trump administration policies are going to be, whether or not we're going to have growth, interest rates are going to move as fast, is there going to be global implications, both economically as well as politically. The bottom line is that there's been a nice move, and this is where the sellers actually could sink themselves some teeth into something. But again, let price be your guide. As a matter of fact, if you're going to take a look at the markets, I'm going to mention the ETFs that you could try to take a view of the broader base. Take a look at the Qs. The trend line has been solidly to the upside. Watch 126, that lower end of the trend line, to be challenged. Diamonds, that's the DIA for the Dow Jones. 201 is the resistance or support, which was previous resistance. It's blown through there in the last couple weeks. The spiders, 230 right now is the support level. 231 is the most current resistance level. We're going to watch that closely. And as I had stated, IWM has finally broken through. That's the small cap ETF that tracks the Russell 2000. It is broken through that 138 resistance level, and that's the first time it has been lagging its peers and not been able to break through its resistance level that was established in January. We're going to watch that very closely. Now, taking a look at the crude markets also, I want to just quickly jump in there since it's the beginning of the week, give you some context. We've seen a solid reversal in crude off of the January lows, and that was some impressive action last week, in spite of the fact that we continue to see what would be considered some bearish inventory data coming out of here in the United States, and we're still questioning whether or not the OPEC and non-OPEC nations are going to stick with their production cuts that they had agreed upon in December. Basically, if you look at either the CL futures contract, the March contract, resistance at 54. On the USO contract, which is the ETF that tracks the oil contract, it is got firm resistance at 1160. We're going to watch that very closely. Break above there means that the crude bulls are starting to gain control, but it hasn't been able to get that momentum to the upside after an impressive move to that level. Also, the US dollar, that's going to dictate a lot of the action in the commodities markets. Right now, it's grinding off of its January low here early in mid-February. Resistance right now on the US dollar is going to come in, if you take a look at UUP, right at that 50-day simple moving average. In other words, we're going to see it right around that 2620 level on UUP. That's a level that dollar bulls, if they don't get above there, there is going to be some stiff resistance there, but it is holding its short-term support level, which is helping the short-term bulls right around that $26, $25.90 level. Right around there is where there is support. A break there would put the dollar bears in the driver's seat. Taking a look at the bond market. The bond market right now, especially the middle component of the curve, that's 7-year, 10-year, it's been in a tight range over the last few, let's say, basically the last month and a half. That grind looks like it's going to continue. Watch for a challenge on IEF. That's a blend between the 7-year and 10-year bond. Watch the 105 level on this ETF that tracks the 7-year and 10-year bonds. A break there would put the bears in control, and that could be a catalyst for the equity markets. Finally, take a look at gold. The precious metal has been in a transitional phase favoring the upside. Coming off of that December bottom that we saw in GLD, that's the ETF that tracks gold. It had a nice bounce off of there and it consolidated basically at the end of January and then resumed the upside here in February. It looks like 116 on GLD is going to be a level we're going to watch very closely if you are a gold bull. And 112 is the support for the longer term or midterm on GLD. All right, that's a lot of action we covered so far this morning in the opening bell. So we're going to be back at 1:30 Eastern time, where we'll be covering all of the action so far in the session. So stay tuned. We'll see you then at 1:30 Eastern time on Strategy Now here at MarketStream.live. Take care and have a great rest of the trading day.